Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into Sanmina's latest earnings report for the fourth quarter and fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sanmina, a leader in integrated manufacturing solutions, has just released their financial results, and there's a lot to unpack, especially with their strong performance in the communications networks and cloud and AI infrastructure sectors.
Revenue and profitability overview. Let's start with the top line. Sanmina reported a net revenue of $2.1 billion for the fourth quarter and $8.1 billion for the fiscal year 2025. John, how does this compare to their previous performance?
Sanmina's revenue for the fiscal year increased by 7.4%, which is a solid growth trajectory. The company has effectively capitalized on the demand in the communications networks and cloud and AI infrastructure markets. Their non-GAAP operating margin for the quarter was 6.0%, and they achieved a non-GAAP diluted EPS of $1.67, which is quite impressive.
Indeed, and how does this align with market expectations?
Well, the analysts were forecasting an EPS of $1.30, so Sanmina has significantly outperformed expectations with their non-GAAP EPS of $1.67. This indicates strong operational efficiency and cost management.
Cash flow and shareholder returns. Moving on to cash flow and shareholder returns, Sanmina reported $199 million in cash flow from operations for the fourth quarter. What does this tell us about their financial health?
This is a strong indicator of Sanmina's robust cash generation capabilities. They also reported a free cash flow of $137 million for the quarter. Additionally, they repurchased approximately 1.44 million shares for $114 million in fiscal year 2025, which reflects their commitment to returning value to shareholders.
And with $926 million in cash and cash equivalents at the end of the quarter, they seem well-positioned for future investments and growth.
Absolutely. This liquidity provides them with the flexibility to pursue strategic initiatives, such as their recent acquisition of ZT Systems, which is expected to enhance their capabilities in the cloud and AI markets.
Strategic initiatives and future outlook. John, let's discuss Sanmina's strategic initiatives and their outlook for the next quarter. They've recently acquired ZT Systems. How does this impact their future prospects?
The acquisition of ZT Systems is transformative for Sanmina. It not only increases their scale, but also expands their capabilities, particularly in the high-growth cloud and AI end markets. This positions them well to capitalize on significant growth opportunities.
And what can we expect from Sanmina in the upcoming quarter?
For the first quarter of fiscal 2026, Sanmina has provided a revenue guidance of $2.9 billion to $3.2 billion and a non-GAAP EPS guidance of $1 to $2.25. This strong guidance reflects their confidence in continued demand and operational execution.
Jure Sola, the CEO, mentioned being excited about the opportunities ahead. It seems like Sanmina is on a promising path.
Indeed, their diversified portfolio and strategic acquisitions are creating a competitive advantage, setting them up for sustained growth.
Key takeaways. As we wrap up, Sanmina has delivered a strong performance for fiscal year 2025, with significant growth in revenue and earnings. Their strategic initiatives, including the acquisition of ZT Systems, position them well for future success. John, any final thoughts?
Sanmina's ability to exceed EPS expectations and their strong cash flow generation are key highlights. Their focus on high-growth markets and strategic acquisitions should continue to drive their performance.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Sanmina's performance in the comments below.